Okay, welcome back. We left off page 9. We had just done for PCT, we'd done all the exchange rates and their calculations, showed how just net income goes to statement of earnings, and then ending retained earnings goes here. We're still missing a calculation here for AOCI, and we're missing the foreign exchange or currency translation adjustment calculation here. Okay, so what I wanted to show you first was, let's say you didn't have enough information to calculate the foreign exchange or currency translation adjustment. Well, we know this is 3016. So balance here has to be 301600. So let's put that in. Because it has to match. So then we could fill in this blank and see what's missing. And it turns out to be negative 51,100. Do that yourself. So the balance, so it's a loss, which means you go up here and we just put that in as negative 51,100, and it's a loss. And you'll want to put that a loss here. And then we can calculate the comprehensive income is negative 16,600. Okay, so if you don't have enough information to calculate the loss or the gain, start at the bottom. And any problems will tell you that. Okay? So we do have enough information, so I'm going to show you back on page 8 how to calculate the foreign exchange or loss. So back on page 8, we're doing PCT, and we're looking at the currency translation adjustment, or foreign exchange gain or loss. Technically, it's currency translation adjustment. And since you guys will have open books, you can make sure you get that name right. So, similar kind of process to what we did for FCT, except we're not focused on monetary and non-monetary, just net assets. So not net monetary assets, just net assets. So calculate assets at the beginning of the year, calculate the change in net assets for the year using net income and dividends, and determine the ending net assets based on the calculations for 1 or 2. The difference is gain or loss. And you can use a T account or a calculation or think it out, whatever you want. So let's set our little chart. We're going to have Kroons, the exchange, and Canadian dollars. So we start with net assets, beginning of year, which is on page 4. And remember, it's minus liabilities. So we've got 2.5 million minus 50,000 minus 450,000 gives us 2 million Kroons. Then we look at changes in net assets for year 2. And what we're going to do is take net income, and everything was at average. and dividends. And we know that's when declared. So, net income, looking at page hang on, I'm having a little blank moment here where I'm getting my number from. 300,000. It's in kroons. I was looking at Canadian dollars. So, oh my goodness. So, we're looking for net income. Of course, we're looking in kroons. I saw my number of 300,000. I'm going, where am I getting it from? It should be 34. So, remember, we're looking at kroons. So, 300,000. And dividends were 100,000. So again, we're looking at things that will change, but notice it's not just monetary. FCT was monetary, that's why we threw out depreciation. Here, it's all net assets, so everything's included here. Now, make a little note to yourself. If there were different rates, would have to calculate individually. Okay, so if, for example, the sales and cost of goods sold, like we talked about earlier, had a different pattern of sales and purchases throughout the year, there'd be different rates. But here we can leave it all together because they're all average. So that's going to give us calculated net assets at the end of year 2. So let's figure that out. So our net assets, we always use closing. So that's times 0.128, which gives us 256,000. For our net income, we used average, 0.115. Gives us 34,500, which we already knew. Dividends, times it by 0.16, which gives us negative 10,600. So that's 279,900. Now we're going to skip a line, and we're going to put at the bottom actual net assets at the end of year 2. So, looking at page 9. So page 9. We take the 2,900 or 2.9 million minus 250,000 minus 450,000 gives us 2.2 million. And at year end, closing is 0.104, and that gives us 228,800. So now we've got to fill in the blank. Started at 279, we went down to 228. So right off the bat, we know it's a loss for our currency translation adjustment. So I just want to, I can't remember if I said this. I said this is closing rate. Well, closing rate for the beginning of year 2. So this is also closing rate, but this is for the end of year 2. So they're both closing rates, just different time periods. Okay, so now we've got loss that we calculated, and go back and fill it in. So we've already in, but we'd put our loss here from our calculation, and then that loss would go down here to AOC. And that would be it for PCT. Remember, we did all this work because we translated a subs presentation currency or functional currency so that we can move them together and consolidate them on page 10. So on page 10,